We're going to go ahead and get started. And I want to welcome Sean. Sean, great to see you.
Yeah, thanks so much, Bryce. Happy to be here and happy to spend some time with you guys today.
Awesome. So why don't you go ahead and make a quick introduction and we'll get going.
Yeah, thanks. So for those of you on the call that I haven't met, my name is Sean Flynn, and I have the privilege, I'll say, to help lead our credit union, community bank, and even our credit card business at TransUnion. So spend a lot of time working with financial institutions of all sizes. I know I've worked with many of you that are here. I see some familiar names on the chat, but come from the credit union space originally, worked in lending and credit and retail for quite a long time, and I spent the last 7.5, 8 years or so here at TransUnion, consulting with our clients and helping our partners like Equipify do great things. So looking forward to the conversation.
Love it. So let's dive into some data. What are you guys seeing at TransUnion?
Yeah, I mean, we've seen tremendous growth in this area, not just in the capabilities that we see out there and the options available to consumers, but as well as the consumer adoption of BNPL. And it's not a fad; it's a new vehicle for consumers to kind of do what they want and get where they need to go. There are some estimates out there. You know, there's not as much concrete evidence of what is out there in terms of balances relative to like credit balances or deposit balances, but there are estimates out there that suggest, there's about $122 billion in outstanding balances on BNPL loans or BNPL accounts, with that number expected to grow by, almost $60 billion in the next 5 years. And that makes sense to us and certainly something I personally would not be surprised to see. And it's really significant, right, relative to the other types of products, financial products that consumers use. And one of the big reasons we're big fans of what you and your team are doing here for the industry, Bryce.
Yeah, absolutely. We see the same thing. It's one of the reasons why financial institutions are getting in the game is they are seeing, their existing cardholders, their existing members using buy now, pay later every single day for a wide variety of different purchases, dollar amounts, income bands, demographics. And obviously at Equipify as the infrastructure enabling financial institutions to compete, we are seeing pretty dramatic growth. We pulled this data last month. Right now, the gross transaction volume flowing through our platform. So these are buy now, pay later plans that consumers are accepting through the financial institutions that we support has grown over 1,500% year over year. Uh, 3 times more institutions launched BNPL in the last 12 months than the previous 2 years combined. And the number of consumers that are activating this inside of their checking account, inside of online banking, has also increased 1,300%. And just want to say, like, yes, these are like kind of mind-numbing numbers. People are always like, well, what does that actually mean? Um, Buy now, pay later has become a absolute fixture in uh, the American consumer credit and payment methods. Obviously back when we started the company, a lot of people were thinking, well, hey, yeah, it's rocketing up in 2021. You had a lot of people either building direct to consumer brands or they were already established in Europe and coming over. But how is this actually going to morph? How is this particular payment method going to change? And over the last 12 months, what we've seen, and this is kind of the primary point I wanted to make sure that everybody who's here understands, is the last 3 months or 12 months, we've seen three things. The first is smart cards on the debit card have started to take over the market. And we'll actually double click into that. The second is obviously it's a race for primacy. And the third is it's a right to play in the future. Uh, the best analogy I can give you on this one really quick is in 1950 and 1960, when credit cards and then eventually debit cards were invented, there was a race for financial institutions to exist, knowing that interchange and deposits are tied together. And we're starting to see some of those same data points correlated with buy now, pay later. So first thing, consumers want smart debit cards. There's a couple articles here, but really what we're seeing is we're seeing third-party fintech, right? These are direct consumer brands have all either launched their own debit card products in the last 12 months, or they have announced and they have a waiting list. We've seen over 30 million consumer debit cards that are issued by fintechs have now bolted on pay later capabilities. So, if you're a financial institution and you're wondering, like, what does that actually mean? These are fintechs that acquire consumers at the retailer, and then now they're rolling out more banking type products and services around that to create a larger moat around their brand and the relationship with that consumer. Where financial institutions are already deposit relationships, card relationships, already a trusted brand inside of that consumer's wallet. And now they are adding smart debit card capabilities with installment loan capabilities on top of the existing relationship. So, Sean, I would love to hear from you and the TransUnion data. What are you guys actually seeing as to reasons why this phenomenon is happening?
We launched or we kind of put out a consumer survey last year, Bryce. And for anybody on the call, if you're interested in the like full detail or rundown of what that was like, feel free to reach out. But I think it told us a number of things. One, as I mentioned before, this is like not some fad. It's definitely something that consumers are wanting and are interested in and rely upon in some cases. They appreciate the convenience. They appreciate the flexibility and the way it can make budgeting, a whole lot more easy. I had mentioned we did come out with this survey, but one of the big takeaways that we saw was the top reasons why people actually use it. And when you go into a survey or do research like that, one of the things you say is like, what are the things we kind of anticipate? What are the things we expect, or what are our hypotheses? And when you think about BNPL, some people think, well, maybe it's just like people that can't afford it or people that can't, these are folks that don't have access to credit. And some of that's true. But the big thing that stuck out to me were there were the two of the top reasons were around access and affordability. And so make BNPL options were making it easier for consumers to budget out a big purchase, which again, some could look at it and say, well, this is maybe they couldn't afford that purchase to begin with because they didn't save enough money or they didn't have access to a credit card. But in reality, a lot of times that's like people just don't have the confidence. They're afraid to put it on a credit card because they don't trust themselves to pay more than the minimum payments due. Or yeah, to that point, maybe they didn't want to bring in their deposits or their savings account and cash that out to go buy a big purchase. Maybe it's a home appliance or something, right? But this ability to have an option that makes you feel, okay, like I can plan this thing out over a few pay periods. I don't have to dip into a credit limit. I don't have to dip into a savings account. Those were the big things and the big themes that we heard, as well as like some of the promotions, right? Some of these folks, and believe it or not, we talk to customers all the time, and some lenders didn't know that some of the buy now, pay later, some of the point of sale options that were out there are 0% in some cases, and there's that makes it easier to kind of think about planning out that purchase, and so they want to take advantage of that. Like I'll use someone else's money for 6 months or 6 weeks or whatever it ends up being. So, but again, the big reasons there are the access and affordability that BNPL gives folks, which again kind of institutes that confidence to make the purchase that they otherwise maybe wouldn't have, which could make a pretty big impact on someone's life, depending on what it is they're looking to purchase.
Oh, for sure. I mean, like personally, I used buy now, pay later. Took my son to Europe this summer. There's a lot of planning that goes into that. My brother's stationed over there, so we wanted to, spend some time with family. And being able to buy now and pay later that particular purchase was important because that allowed me to offered me the financial flexibility upfront, where I could have put it on a credit card, but now I am buying a ticket 3 months, 6 months in advance and likely accruing interest. Where BNPL, even though majority are interest bearing, it allows you to have fixed payments without accrual. So that's personally why I use it today. So we talked about debit cards, flexible payment options, and why consumers are finding it as an attractive payment method. Now let's talk about who actually owns it. One of the very interesting things the last 12 months is the acceleration of players in this space. Now, a lot of people think about the kind of the incumbent or the people who initially invented buy now pay later, the larger brands out there. Obviously, the financial institutions that we're enabling to compete, but you cannot um, say anything smaller about the Googles and Apples and the individual retailers themselves. Like I think we have Costco and Walmart called out on the screen. But the reason why all of these players are trying to step into buy now, pay later is they want to own the purchase to payment journey. If you offer financial flexibility and it is tied to your brand, you are creating brand affinity. Sean, I don't know if you have any thoughts on this one, but we've seen a giant delta, and we'll talk about the data here in a minute, of debit card uptick in usage and how many more times consumers are now logging into online banking because they know that that is where they're going to go to receive those types of offers and engagement. What are you guys seeing?
Yeah, I mean, as far as like the engagement and logging into online banking, for sure. And there was an article recently that talked about debit card usage being up over credit card usage for the first time in many, many years. I think it was a Wall Street Journal article or something recently, but we hear that quite a bit from our customers, especially on the credit union and the community bank side. But this idea of BNPL, Bryce, kind of being attractive to all types of consumers. It really is. We continue to see that being attractive across the age and as well as the income spectrum. It's a great tool for younger consumers as sort of proverbial credit training wheels, so to speak. But it also makes it easier for me as an older millennial because frankly, I don't have to get up off the couch to grab my wallet. And so we have seen that, if you think about it, if you're a credit union or if you're a bank, and you look at where kind of your big deposits are, and you look at the screen here, the stats on the screen, and thinking about like where are you most engaging with you, if they have deposits with you, and this is certainly attractive to them, this BNPL option. So again, it ranges kind of across the age groups as well as other demographics as well.
Yeah, absolutely. Obviously, from Equipify's vantage point, we're unlocking really two different consumer groups in how we look at it. The first are consumers who were already using third-party buy now, pay later, and then being able to convert those to use their primary FI. And the second is the group of consumers that maybe didn't want to use a non-financial institution buy now, pay later, and now are. What we are seeing is Gen X and Millennial is the predominant use case of bank buy now, pay later, financial institution buy now, pay later. um, every single time we launch a new financial institution, they're always surprised at the baby boomer usage. To be frank, most financial institution C-level executives tend to fall in the Gen X or baby boomer category, and they're like, "Oh, well, I don't use this product." So maybe most people my age don't. And what we see are, in particular, the baby boomer generation will use this for very large ticket healthcare and travel. One of the very first transactions we did, we enabled was a 70 plus year old wanted to book a Carnival cruise with her family, and being able to pay that off over time from her banking app was something that she didn't have access to before, and she probably wouldn't have used otherwise. So, Sean, we talked about age. Now let's talk maybe about risk profile of different consumers and use cases.
Yeah, this is that. I think folks on the phone probably have seen us present on this all the time, but we hear from customers that their customers and their members are really focused on credit education. They want to responsibly manage their credit and their finances, and that does reflect in our data. And this is again a stat that we kind of produce every quarter. But as of last quarter, we saw there were more consumers that had super prime credit scores than ever before, so over 41%. There are a lot of reasons for that, but it's a general theme that we continue to hear from banks and from credit unions that their customers and their members they want to keep that score where it's at, right? They want to protect what they've done there, and they want to continue to manage their finances responsibly. And I'll
So,
say that. Oh, Bryce, go ahead. Sorry.
yeah, no, I just want to say, like, so if I was listening here and I wasn't already, offering buy now pay later, I'd be like, okay, so you're saying like everybody uses it, all FICO bands use it, all ages use it. Like, is that actually true? I do want to say that younger consumers in particular still are the predominant use case for buy now pay later, and it's because they haven't established patterns in their life using the incumbent products, right? Like you and I are both kind of the older millennial generation. We kind of grew up in the world where you get a debit card and then eventually maybe you get a slightly better paying job and you get a credit card, right? And that was the path, that was the journey that all of us fell on. Where younger consumers, that's not necessarily the journey anymore. And I'd love to just hear what are your thoughts on that?
Yeah, I mean, same, right? I think managing this, the younger consumers coming up today, they're actually, we've done some surveys on this that Gen Z in particular is like deathly afraid of getting into credit card debt that they can't escape. But managing credit, managing finances responsibly doesn't mean stop borrowing. So a lot of the data we have, and some you can see right here, both in credit card and personal loan growth, suggests that these consumers, the younger consumers, continue to have a really healthy appetite for credit, and they have a desire to borrow, but they want to do so in the right way. And I think for lenders that have, or for financial institutions that have deposit accounts too, this opportunity to be the place where these consumers come to engage in that activity, whether that's a credit card, whether it's personal loan, but primarily a BNPL on the deposit side. There's an interesting opportunity for community institutions here to kind of be that center of trust.
Oh, for sure. Yeah. And offering it intelligently to your consumer base, to your members. And then also they want to use it intelligently and feel empowered to be able to choose their own cash flow capabilities. The marketplace obviously is demanding a product that allows a consumer to get easy access to credit, but in a safe way. And obviously, that's why financial institutions are accelerating their adoption and offering buy now, pay later in-house. And that really brings us to our third point. Accessible, convenient credit that can be used intelligently, budgeted with transparency. Control and visibility for the consumer is a winning formula. That's why financial institutions have to play in this space. So institutions who have or are in the process of launching their own products are already understanding that they simply need to launch this to have the right to compete for that 22-year-old, that 26-year-old, their deposit relationship, their card relationship, and then eventually being able to turn them into more of a full stack customer. That's how I phrase it, meaning, when they want their car, their insurance, their retirement, you now have the right to earn that business. So for those consumers who are choosing buy now pay later over traditional credit products, by launching your own products, you now have the chance to retain and grow that share. So want to give a quick shout out and show the impact of what this actually could mean. So, USF Credit Union down in Florida launched their own in-house buy now pay later solution through our partnership last year, and pretty incredible. They won the Digital Banking Award from the World Council of Credit Unions. Uh, the reason why they won is how well they've been able to serve their members as a credit union through the use of their in-house buy now pay later payment method. So you think about it from a college founded credit union to make sure that they have the payment products that younger consumers want is really setting them up for a success, for decades to come. And I just love the fact that they leaned in so hard, especially when the hurricanes hit Florida. They really wanted to make sure that their members knew that they were there for them, offering financial flexibility. So one of the big data points that we see at EquipFi, and this is the first time we're sharing this kind of more in a public forum, is once a consumer starts to use that smart debit card with installment capabilities, their spend does increase, and it increases in a pretty meaningful way. And obviously, this makes sense when you think about it, Sean. So consumer starts to use installments. Now they know they have financial flexibility when they want to go pay for that washer and dryer, or that family trip to Europe, or that Carnival cruise, or maybe a generator during hurricane season. what you're doing is you're actually moving the spend that they would have made otherwise. They're already going to spend that money onto your card rails. So we're seeing that spend increase 85 to $115 on average. And what that means is they're logging in more and they're using your cards. It's actually a pretty simple formula when you think about it. So obviously, we've grown a lot. TransUnion's been has really leaned in, and we appreciate you being here with me today, Sean. Lots of great data. I know there's going to be some follow-ups afterwards. If somebody wants to chat with you or anybody at TransUnion, how should they reach out?
Yeah, they can reach out to their TransUnion rep if they don't know who that is or they don't have one. They can certainly reach out to me directly. My contact info should be available here if you guys need it. I know a bunch of folks have reached out to me on LinkedIn asking about this event too, so happy to respond to folks there. But we can get you answers if you got questions. I think that was like a
Love it.
Radio Shack spot back in the day. As an older millennial, I think we know what that means.
Perfect. Yeah, yeah. I'll send everybody Sean's cell phone number later, and
Yeah.
you can send him memes. Sean, thank you so much for showing up today. Appreciate it.
Yeah. Good luck. Thanks, guys.